Hi, everybody. Hopefully, you're all here. Going solo today. Matthew's out traveling, and realistically, today's kind of one of those days where just mostly reviewing stuff and looking into the future a little bit. And then I'm going to answer for an odd comment that I did make last night on X in reply to Matthew's reply to Jim Cramer. Um, all coming up. And then I'm going to introduce you to something I'm calling the mayonnaise index. Jim Cramer, I know you're watching. Pay attention. This is going to be kind of funny. Although it's possibly a theme you might have caught on to. I don't know. I don't watch your show anymore. So let's get into it. First, let's have a look at QQQ and realize that we've pretty much tapped the closest level of support here, and maybe we got a wing and a prayer of a chance of coming back for a reversion or a relief rally, as you will, to about 484 here on QQQ. Although ideally, we should range here for a while and then maybe come into a new trend if we're going to be bulls. But if we smoke this level, gosh, guys, we've got a little ways to go. That's a little bit above the halfway mark to this low back here in April of 24. And things are looking like they might pick up here, but this is going to be kind of a play it by the cuff of your sleeve type of moment in market history, because we've got a lot going on. We got Jolts came out this morning, gave us a quick little bit of volatility. Really wasn't much, more than expected. And then we got the tariff thing going on. We've got people pounding the table all over the place, and just a bunch of saber rattling and stuff going on in politics that we really don't have to care about. One statement I made to reply to someone who was a little bit more emotional about politics than one should be is it makes no sense to wallow in the trail of crap that the average politician leaves behind. It's better to hop on their coattails and take advantage of the direction they're taking you. Yeah, go with that. And when you're a trader, you absolutely have to shut your mind off to all the crap and focus on where the market's moving. Hang on to those coattails and make a few scalps here and there. There will be a time when you start to see a trend and you can start either A, investing long, or B, sitting on a pile of cash. I know for a fact that Warren Buffett's probably got a pile of cash big enough to sit on and put him in low Earth orbit. Not just stacking them all vertically, but a big pile wide with a nice sturdy base. That's how things pile up and you can stand on them. Anyway, that cash is ready to deploy at any moment, and eventually we'll see some swings in the market. Let's look a little further left here and realize, hey, that's what a bear market looks like. This was a pretty clear signal on the weekly chart with this really nice evening star, obviously. Got a little bit more than a bar below, tested support, rejected resistance, and you know the story, it came back down. A lot of us over at the Bullishbrs, we did very well in the bear market. In fact, this volatility was awesome. Couldn't have asked for better volatility. And then the long-term stuff came into play. I started wheel trading a whole bunch of real estate investment trusts, or REITs, and other things that were just an absolute perfect rotation and paid very well riding this entire trend. I don't need this anymore. And the pullbacks and everything were just easy to map. Now we're kind of in unknown territory, and we may expect some volatility here, but I don't expect that we're seeing anything like a bear market, other than the fact that perhaps this bearish engulfing on the weekly was kind of an indicator. Those don't typically stay bearish for too long. They usually revert to a half back, or give us a mean reversion of a previous trend, and that's about what it's doing right now. Until we break that zone, we just stay in limbo and scalp the range until it eventually breaks. Everything looks like we're likely to range at this point, and we'll see what comes out of this later. So let's get into a couple of things we poked around in last week, and then also let's look at a couple of things that we might see in the foreseeable future for a possible theme. And that's where I'll make mention of the mayonnaise index, and you'll see why in a minute. First, let's look at a couple Mag 7s and a couple other strong things moving in the market. Just to revisit again, Apple, let me turn my drawings back on. Apple testing a key pivot area about 220. If we get a nice little reversion play here, I wouldn't expect it to get too much higher than 225 until we break a range here. This wedge is pretty ominous with it could break and dip into liquidity and start testing some lows. So be a little nimble if you're going to mess with Apple. I'm staying out of it for now. Same with Tesla. It's interesting. I mean, we got that little rush this morning, but it really wasn't much. I mean, look at the grand scale things on the daily chart. Just a doji. We knew that we were likely to come down and test this 211. We haven't been there yet. We're getting close. We knew the bearish measured move was pretty much in play. Now we've got a secondary here. You can see the primary and accumulation. Okay, we've reached the bottom and bounced a little bit, but I think this is more of just some shorts covering, some new money chasing, and maybe just a short-term relief rally, but I don't think it's going to be much more than that. Another YouTuber I like to mention a lot is a channel called Connecting the Dots. Eventually, I want to talk to that guy. If you're out there listening, please, this would be awesome to have you as a guest and explain some things. But one thing that was mentioned in one of the videos is that Elon Musk was noticeably rattled after coming back from a visit to the Toyota Research and Development headquarters. They showed him something that kind of gave him the impression that this could potentially end the EV era. And about a year and a half ago, I started kind of talking a little bit about this. I said, and I'll quote loosely, if Toyota finds a way to kind of main source a hydrogen powered engine and or something that can run on multiple fuels or perhaps run more efficiently, marry that to the hybrid technology and you will smoke the EV market and you'll be the be all end all, so to speak. And there's been some talk of like what was it, BMW, maybe Mercedes coming out with something that kind of falls along those lines. But ideally, it's going to come down to how fast and efficiently you can absorb energy into a battery. That's the next step. It's not quite there yet, but close. And of course, Toyota's kind of on the march with that. So let me get Toyota on screen real quick here. Yeah, we're in a place where we found some support. Can we see that Toyota gets a little bit of a reprieve here? Well, yeah, the gap's closed. We're likely to see a few buyers come in here. With the recent tariffs, though, and all that stuff, everybody's thinking like, oh, okay, well, imports are going to be an issue. And for some reason, people can't get it out of their head that Toyota is less of an import than GM or Stellantis, and in some cases, Ford. They are more domestic than the greater part of the big three. In fact, if you look into GM, they're really becoming nothing more than sales representatives to move Chinese cars these days. There is very, very, very little of GM made in the U.S., if any, these days. It's disgusting what they did. They took a handout from Congress begging for change, got bailed out billions of dollars, and what did they do? They up and moved to China, pretty much. So let that rag ring out, and I'll take all the heat comments coming back at me from saying that I don't care. You're not going to faze me. I'm still going to despise GM for just absolutely abandoning the American people and then trying to slang, Chinese cars back to us. No, it doesn't fly with me. Toyota's more at home than any of these guys, guaranteed. And then if you also check in with the Connecting the Dots guy, it points out directly like, hey, Mexican tariffs can actually put a halt to them sneaking Chinese cars across the Mexican border. So look out, GM. I might be smiling and shorting you soon. But Toyota, I think I'll probably take the funds I make shorting GM and put it into Toyota long term, because I'm looking at Toyota and realizing that we've got some pretty good things to be had here. Let me get the moving averages on here. Why don't I have my moving averages? There we go. So overall, we can see that I rarely use moving averages, but I've had to put them on. We can see the consolidation phase is pretty much complete. We've had a lot of capitalization. Sure, they've had some different issues, whatever. but we're consolidated in this nice descending wedge here, and typically if we find support from there and we bounce out, we end up with at least a reversion, so pretty obvious. And this will be a lot longer term than I'm usually going to call out because I'm pretty short focused within the quarter range for or quarterly range for price call outs and stuff. But around 213 to 215 is where I see Toyota going for a reversion if we break out of this range, and it's getting ready. Give it some time. We're looking like everything's kind of crossing up and setting up for a bull run long term. This could probably take several months to get there, more or less. Let's have a look at GM. That looks like a bear flag to anybody, and myself included. And I love seeing GM look bearish. A while back, I was looking at this as a primary and a secondary. It didn't quite make a full bearish measured move, but it's setting up to be a little bit bigger than that. And for now, this whole tariff thing with both Chinese products and maybe even eventually Mexican products, although they're kind of falling in line with securing their side of the border, it seems. Be aware that if there's any sort of stipulation stopping GM from importing Chinese cars to the American market through Mexico, that's the gateway. If it eventually dissolves, okay, I can see it happening. They'll make some sales, they'll make some money, but realistically, I don't even consider them to be an American company anymore, and it's looking fairly bearish to me. That's looking like it could be a pretty decent little bear flag, so let's map that out. Shorter term, of course, we're going to look at this as our primary and probably see GM maybe start to become bearish in the next probably week or so, depending on a lot of this tariff outcome and maybe pending an investigation into what they're doing with people. And first target probably about $43. Second target $30, $38, $39 range accordingly. And just be careful that we could see a quick little rally off of the 45-50 pivot area. But I'm looking to short GM. I think I'm going to be excited about that pretty soon here. So yeah. Of course, this is not financial advice. I'm just pointing out some basic analysis and a little bit of a deeper dive than I'm used to. Let's look at Bitcoin. This has been fun. Playing Bitcoin all over the place in this generally bearish setup. We've made most of a reversion. We came back into support of this level here. Can we reverse here? It's possible, but I would treat this like a relief rally first and then wait for the later outcome. We need to break back above 82 with some force before we can really trust any kind of reversion rally. And 84, of course, is a short-term target. 91, 92, and even 95 could be the reversion target for this entire trend here. But for now, wait for accumulation. Eventually, we'll get into some range here. My other baby here, MSTU, kind of following suit. I did get early assignment on those 450 puts I have out, and I'm sitting pretty. I'll wait and see if I can sell some covered calls when we swing back up in that range. And if we get the rest of the relief rally on Bitcoin, perhaps MSTU will follow suit and give me some reprieve with that and some profit. Going into a couple other things before we get too far away from there. We still are looking at CRM and realizing that we've hit the half MM and now we've kind of bounced back above it. This feels like a pretty nice undercut and rally situation. Even looking at the weekly, we're right in a range where we should see some reversion, maybe get back in the 295 range pretty quick here. Be aware that this is on a daily, if we close this as a nice bullish engulfing, probably going to see a couple of profit takers right around 288 to 290, right about where that 200 day is. Pretty typical. So if you're staying into a long-term position in this thing, become nimble or just be ready to take advantage of movement. But in the short term, day traders and swing traders all over this. I'm liking this reversion target up here pretty quick, and then maybe if things get nice and clean into a trend, we've got a couple resistance levels to break, and then upper range reversion target of 328 is possible. So far, this is looking pretty good. Natural gas has been kind of in the wings here, figuring out our short-term energy needs, and infrastructure got hit a little bit with some of the back and forth between us and Canada. I'll just let those politics play out, but in the meantime, there's volatility, and that's what I like to take advantage of. So NFE was a short-term scalp and could become a long-term trade pretty soon. New Fortress Energy. And looking like a pretty nice double bottom setting up here. Let's see if we can hold support around 870 or so and maybe come back into another play against resistance here. This time it wouldn't be at the 970 range or $10 range. It'd probably be more like the 950 or so by the time we get there. So let's see if we get one more nice swing out of this and then maybe go for reversion to like 1235. The swing trade plan was if we broke $10, we could see a pretty nice move up to reversion, but not yet. It looks like we had some news that was a little bit of risk in there, and some people backed out of that. So pretty smart to probably take profit as it came back through the $10 range if you got long around 970 or so, where I was looking long. But for short term, scalp it. Maybe come back and compound if we reverse here. Look for support around 860, 850 or so. See if we get a nice daily double bottom out of this and maybe come back into a bull trend. News is kind of fun with that, and those things happen. They'll surprise you sometimes. Just be ready to be ready to take profit at any moment. And I prefer avoiding stop losses. I like to stop gain. So if I see things come back through support with too much force, I would rather get stopped out for a profit than stopped out for a loss. So of course keep the stop kind of trailing if you're in a trend that's even short term like this one, and be ready to exit the position if it doesn't work out. You have to have a part B of your plan when you're trading. Where do I get out for a profit should things turn on me? Well, that's pretty obvious. $10 was the key pivot. Pretty easy one to run. Now it's wait and see. Might be able to get into some bullish moves. I still have some of that position on. I might even go so far as to options chain kind of sucks on it, but I wish I could sell some puts around here. That'd be cool. All right, a couple other things to pay attention to. EQT, and this is where our call out from last week was right on the floor, and we are working right back to the key pivot here, 49.40. Pretty easy range. Possibly going to push through the top of this high wave here and maybe approach the liquidity zone, which is about where reversion would be. So we're looking for a move to continue and maybe approach the $50 bill range before we see some rejection. Maybe be nimble with this one because it's going to be a bit of a news risk. So, kind of keep an eye on your shorter term charts and figure out where you're at range wise and roll with it. If you got long off of that dip and you got long in the break here around 47, keep your stop a little loose because you might get one of these liquidity grabs like we had this morning here and dip into 48 territory, but it seems to be running pretty strong still. Watch this 49.45 pivot. It's a key area. If we can range and get above there and then break above 50, pretty good shot at hitting the liquidity high up here. At least the lower edge of it is going to be, about the fib target for this previous high here, even though we've already done it once. So swing and swing again. This thing's just been a go-giver, baby. Pardon my runny nose. I'm a little bit under the weather still from that flu I had a couple weeks ago. It's gnarly. Don't get that thing. Let's see. One other thing to get into. How about... Oh yeah, China stuff. Baba. I'm pretty much done with that. It was a pretty easy trade to pretty close to 140. Good enough. Be a little bit aware that we're accumulating here, and this is starting to look like we could grab some more liquidity off the 200 on the 2-hour chart. So keep a close eye on this 132 area. Let's go to the daily real quick. It is a bit parabolic from this play here, and the weekly target, we knew where this pivot was. It's pretty obvious, and the reversion target's a little higher, but if I know anything about market structure, when we start getting rejection around a key resistance area, oftentimes we'll give back half and then kind of reassess the move. If you've kind of looked at like PayPal, Snapchat's been in there. Market structure kind of does this thing, even with things like Baba. I mean, capitalization, accumulation, after, you get the idea. So keep an eye on that 132. That's kind of a critical support area now that it's broken it as resistance. I'm going to make that sucker red, because if we break that, we could see a nice clean short back to half around 109, 110. Lots of stuff politically, and yeah, they've got stimulus going on, all sorts of fun stuff over in China. So we'll see how this goes. Not to mention the tariffs. Ugh. Drama. But again, I still want to put that on a hat. Make volatility great again, guys, and keep your emotions out of it. Just trade the chart. This stuff is just giving you lots of opportunity to compound things and make some money. Another one we looked at, hymns. That's not looking so bullish anymore. Kind of looking like capitalization taking effect here. It's a fairly steep trend up. It went parabolic and then some, but it didn't last. So now we're looking for support, previous high here, obviously. We may see a little bit of a relief rally and maybe touch $40 again, possibly, but I'm thinking we're probably going to accumulate a little bit more support down lower, around $28 to $29, somewhere in that neighborhood, sooner than later. Every time you see something parabolic like this and you realize that there's a big old wick on top, all those limit orders apply. This is all liquidity zone stuff. I know we talked about this on Rebel Finance, which we're doing again, but we're bumping to Friday this week. Last week we talked about liquidity being pretty much marked out by every time you see a wick. It's just price sweeping through a bunch of limit orders, and that's where the liquidity is going to be. Whether it's a trailing stop or stop losses, or even taking profit in limit orders, they're all limit orders. And when they get swept like that, I mean, it's pretty obvious there's going to be liquidity there. Swing traders will call this more of a what they call the traders action zone, or the TAZ. Kind of the same thing, but this is more dynamic because all you got to do is look for the wicks. You don't really have to care about specific ranges. You just go and use everything as a range. So whether it's a wick for liquidity, edges of a range, or use a bar as a range bar, some people would call it, for where you expect price to go. And when you just look left at previous encounters of price, you'll see those everywhere. I could draw a whole bunch of rectangles off all these wicks and find all these little zones to return to when things reverse, and they're pretty obvious. Now look left in the short term. This is the most prominent one that we should be paying attention to right here, and that's where resistance is. And you can see it wicked exactly to the top of that sucker this morning, and profit was taken. This is liquidity. If we break this, this is half of this trend, obviously. Sure, we could shoot for these previous highs and maybe give a little bit more, but for now, this looks more like a bear flag than anything, and this is where we'd expect it to confirm if it gets rejected here and then break support. So pay attention. This is going to likely give us a little bit of bearish movement here, and we trade it both directions. Pretty much anything we call out here. There's some bear targets. They're easy to find. Look further left. Where was previous liquidity? Well, right down here, 34, 35 bucks. Pretty easy stuff. So anytime you see a wick, any time frame, if you feel like you want to find key areas in a hurry, they're pretty obvious. And it gives you range, and it gives you trade ideas, trade plans, and also opportunity. Never forget, that's all opportunity. So pretty easy stuff. I like to give a little education if I can. All right, a couple other things to quickly look at, and then let's just get right into a couple things real quick here. MRVL. I didn't really care for this one until I noticed that it kind of found support at the previous area here. I'll give this a couple more days to work out. If it doesn't give us a reversal to go for a reversion or a gap fill or maybe even a dead cat bounce, I'm going to stay out of that one. I am not really very fond about that one just yet. NVO, well, we already know what happened there. It was very obvious. Liquidity zone got rejected and clean right to the pivot. Pretty easy move. Now it's looking a lot like a big old bear flag. So, yep, we were able to scalp the bull side and knew where to take profit. Pretty easy stuff. Now we're back to key support here. If we make a move under, well, this is pretty quick here. Usually when you get very quick price action, it tends to follow the big bars to the left. So know where the key support area is, probably right around 76.50. And if we breach that, it's a pretty quick trip to, go a little lower, 75 and 69.50. No puns intended there. Yeah, that could easily be reached. And then right around there, maybe see some support. And if we break that, well, there's plenty more to short. It happens. This looks like capitalization to me. And it was a pretty easy head and shoulders top or triple top or whatever you want to call it. Reversal was pretty much written in stone there. And usually they will find support at key levels that they found resistance on the way up. And you can see they all line up. They're pretty easy. Now we got this guy. We did breach a little bit. We stayed inside this range bar. Pretty clean. Rejected liquidity. Bye-bye. Easy play. PLTR was another one to kind of review. Another parabolic move and capitalization taking shape. Pretty obvious stuff. Came back right to reversion target, $75. Easy call. That was one of the easy charts that we could call out. Pretty nice to see. Do I even go to Tesla? I already did. All right, let's go to the mayonnaise index. This is where stuff gets fun. Kind of a top-down theory, and there's probably a few more equities I'm going to add to this later. But the reason I talked about it is it's kind of a current theme one way or another. Egg prices, I'm sure everybody notices that the average is around $5, $6 a dozen. It's pretty obvious. Pardon me a second. This cough is never going away. But I'm not going to cough in your ear. So pretty obvious stuff with what's going on in the market. So around December, we had the bird flu show up in some of the egg producers, facilities, and they have to call the entire flock in these things when even one bird is infected. Pretty obvious. Demand for eggs never went down. And of course, you can see that there was some run up. Things were looking good until the bird flu hit, of course, calling new chicks to replace the chickens. They take, even with hormones, around 5 months or so before they start to produce eggs again. Well, December to this year, that puts us out to about April before we start seeing some more eggs come in to meet demand. Well, looking here is a pretty obvious bear flag here. I pointed this out a while ago. I'm like, well, take advantage of this. This would have been an easy short, and it sure was. Came into liquidity here. We may even get a measured move out of this, rejecting the key zone here. Coming in to breach the 200-day one more time should send us reverting this trend here. So we may have a short-term bear target around 73.50 or so, which is really just a half mm for this guy here. Let me pop this down here so we can kind of see it better. And yeah, it lines right up. Half key bar here. Pretty easy. So if things get bearish continuing into the egg market, well, prices will go up on eggs, of course, because the demand didn't really change much. And one thing that leads me to run towards mayonnaise, look at Unilever's chart. They make a lot of mayonnaise. I don't know if you know, but that's the parent company for most of the major mayonnaise in America. And of course, they've been able to quickly react to the December issue with the culling of the flocks and stuff and adjust their margin accordingly with speculations of prices coming up. But they, obviously can't do it on the drop of a hat. So, of course, your mayonnaise prices are going to go up with eggs too. Here's where it trickles into everything. I mean, you got baked goods, you've got ice cream, you've got a lot of things that use eggs, and even Hershey is going to be affected by egg prices in one way or another. So when you start seeing that there was a pretty obvious close yesterday with a nice bearish reversal candle here at a reversion target, this became an obvious short. It was pretty easy this morning to spot that. I played that out for the Bullishbrs crew this morning, and showed it pretty readily. Target wise, I wasn't able to get fully into targets, but short term, about $58 for Unilever here. And then obviously there's a big old gap here. This is pretty interesting, right in February 12th. Well, was that an earnings call? I don't remember. Oh, no, that was the 13th. That was anticipation. But pretty obvious when these things come back down, they tend to give half back of the trend. Obvious. Now we're coming back to probably the top of that gap, around 58 bucks short term. If we breach that, pop it down. There's your mayonnaise index. So why do I call it an index? Well, two key factors in economics are affordable fuel and affordable food. Fuel's very affordable right now. Gas prices are pretty low, but food costs way up there. The emotional reaction to that, everybody throws politics around saying so and so is responsible for the egg prices going through the roof. No, the bird flu is. Look at the logic explanation. Who cares what politicians are doing? But look at the obvious. Okay, yeah, they got to kill a bunch of chickens, and those chickens are going to, or the chicks that replace those chickens are going to take a while to be able to replenish the egg supply. Now, for a while, things were still okay in Canada, so we were able to buy some eggs from them, and now we've got the tariff thing going. See where this is going? So now it's obvious that demand didn't change much for eggs. Unilever here is a key consumer of eggs for their products, and well, here you go. Margins can't be adjusted fast enough, so demand comes down because prices are too high. It all ripples through the economy, but it provides volatility and gives us traders opportunity. And we can see that if we just detach our emotional rage towards politicians and just realize, hey, it's a logical explanation for this stuff, focus on that. Why look over here when you can look right in front of you and realize obvious short? Here it is, opportunities. And then eventually you'll find an opportunity to go long and take a long-term investment in these things as they eventually recover. Pretty simple to take advantage of a very fast-moving bear market, and then an eventual reversal. Take some of that cash you made in the bear market, compound that into your longer investments, and voila, you're performing just as well as Warren Buffett on your own scale. It's easy. So one thing that doesn't happen necessarily on the larger scales is liquidity, and it takes a while to unwind a long position when you're looking at billions of dollars in the mix, or even trillions in some cases. And the same goes for buying. So in eventuality, these things will be deployed in action, and lo and behold, you'll have opportunity for trading volatility in the meantime on smaller scales. That's where us traders love to see that market. Give us opportunity, we trade it. And I will say it again, make volatility great again. Keep rattling those sabers. Ideally, the market's going to give you a lot of alpha. You just sometimes have to be bearish to get some of it. That's all. Pretty easy stuff. All right, anyway, last but not least, let's look at Hershey. Hershey was a nice, obvious bear flag back here. Pretty easy to see. And now we're looking for a reversion back to that resistance. Pretty easy trade. Do you see the diamond pattern? It points right to this target right here. You could use a wolf wave and do the same thing. That was a pretty easy trade. Now we're back off the floor, back up. Of course, margins can change really fast with stuff that moves off the shelves really fast, and Hershey's really good at moving stuff off the shelves fast, including ice cream. And here we are, right to resistance. Look for a little bit of an increase in price of eggs to affect this in the short term, and we have a little bit of a nice bearish candle here. pretty easy reversion back to support, probably about 178 or so. And if this is a evening star and it's starting to look like one, we got the bar up, the doji, and the bar down. We end up with two ways to go. Either we get a quick short, basically size up your primary bar and stick it over here to resistance. Easy target. It puts us inside this bar, obvious. So yeah, 174.35 could be a nice floor pullback for Hershey, but sometimes these guys will get reversion really quickly. So you get half of the third bar back, pretty typical. So if you see a quick relief rally from this quick short that the traders are taking advantage of, know where it's going to go back to. So if we bounce off this level, obviously half that third bar is this. We go right back to resistance, 186.25. Day traders all over Hershey, pretty easy. Swing traders as well. We can see this pretty obviously. So short-term targets, volatility. We can walk that range, and eventually they'll recover. Hershey's is probably the faster company to take advantage of being able to adjust margins very quickly to absorb increased cost of products that they process into their products. So they have that advantage over Unilever. Unilever takes a lot longer to recover from these things. So you get the idea. Pay attention to what the market's telling you and just trade that volatility. That volatility is a gift. Enjoy it. Use it to compound your investments for later times. They'll come. So that's my definition of the mayonnaise index. So kind of plot things out, looking for the end of this month to kind of be pretty dicey, obviously. And probably around April, when those brand new chickens start laying some eggs, demand will be met, and thus food prices will come down, and likely we'll have some recovery trends going back into previous highs. And looking at the indexes, in spite of them being more influenced by, let's say, tech than anything, these things all rely on the consumer. And if you can afford food and breathe easy, you're not going to be as tight with your budget on stuff that you either want to replace that's big ticket items or maybe some leisurely spending. You get the idea. When you can afford to breathe and eat and drive around, you have a little bit more disposable income to do what you want with. So your wants come out, and of course, a lot of tech stocks are wants. You want to upgrade your computer, well, you're going to be buying some tech. You want to upgrade your phone, yeah, you're buying some tech. That's what we get. So yes, consumer is stressed with debt. Yes, the consumer is stressed with high interest rates. But in general, tech will eventually give rotation once it's affordable to eat again. Pretty simple stuff. In the meantime, the market's just going to give us some volatility in the short term. So finish out the month of March, get your scalps in, and then probably about mid-April, we're going to start seeing some really good swing setups. I can almost promise you that. And either they'll be bearish or bullish. We'll figure out what the trend is by about then. And that's why I made that statement. Let's watch CALM and keep an eye on it for a pretty good indicator of when to start picking up some longs. So if you like that comment, thanks for the like. And if you're confused by that comment, watch this video. Now you'll know. All right, I'm going to call it the mayonnaise index, and I'm going to stick it right in front of Kramer as soon as I'm done with this. Hopefully he pays attention and replies. I would love a reply from Kramer. A couple other quick things to look at. Let me pop open my email and get the heat strategy mailer out, and let's see here. We're looking at, a possible secondary DeepSeek move here. Couple of beneficiaries. Let's look at Microsoft and Amazon. That's probably a good place to start, and then I'll eventually get to IBM. Amazon, key support, likely to print a weekly doji here. Yes, things with the tariffs are going to affect them a lot. They have a ton of stuff that they import from China and other places. Pretty obvious. We've basically given back most of this secondary move here. Can it reverse here? Well, it is a key area for support. And if you look at the top of this wick here, that whole thing is about an LZ here. Liquidity zone, as I call it, LZ for short. If we hold a doji here and we start giving half back of this trend, that becomes a pretty obvious wedge and a wave 2 in that wedge. Let me mark it out for you so you can see it a little easier. Take my time drawing things. Okay, so coming off a doji, come back to resistance here. Easy short-term target around 210. That's the weekly chart. Daily chart, watch for a shorter term reversal, obviously. Here, we are under the 200 period. Matthew loves looking for these undercut and rallies, and the 200 is a good strong one. Note that the 50 and the 20 are still pointed down, and likely price will meet the 50 somewhere around reversion if we reverse here. So look for that short-term swing. And I'm getting that some of these various countries that we're throwing tariffs at will come to the table and start talking things over. That's the whole plan anyways, just to get them to the table to start talking, because it's kind of a market that leans too far to one side, if you know what I mean. They have tariffs on our goods that we export that are way higher than the tariffs that we're putting on their exports. So pretty simple math says if you want to get their attention, start rattling that tariff rate. And of course, you're going to get some talks between leaders, and eventually things will work out. So if things work out for the better, pretty obvious return to mean target for Amazon here, and then pay attention to that regression level. If this becomes a wave 2 issue, eventually if we break out above it, hit angular resistance, and then I'll start drawing a trap detector to see if we breach liquidity, hit the 86.6 fib here, and maybe reject around 238 or so. Who knows? We'll have to see what that does, probably by about mid-April. Pretty obvious. So let's start paying attention to the mayonnaise index, and then also look at other stuff that, people buy a lot of stuff on Amazon, and it's a pretty easy mark. Adjusting margins on that, sure, that's easy to do, but when it comes to supply demand, if there's no demand for it because people can't afford to eat, they're going to suffer. Now, pay attention also to the halfback here. We've kind of nailed it at the bottom of this bar with a wick. Pretty obvious, given halfback of that trend. Likely to have at least a relief rally, out there, say it, maybe hit that regression. And in all intents and purposes, if things go south in the news, well, pretty easy to go and short it and go bearish back to support. Easy stuff. Another one, let's go into IBM really quick, and then I want to get into Microsoft and Google too, but I'm not as interested in those as I am in IBM. I haven't done the dope on it yet, but old stuff. I got so many drawings, it makes my charts look like really messy. But one thing to pay attention to with IBM here, and I don't know all the metrics, that's kind of why I like having Matthew as a co-host, even though he's out today. He's really good at finding all the reasons for stuff. I just find the price action. So a key area to pay attention to is this previous liquidity zone here. We never did breach this low to hit this gap. We talked about it. We came exactly to the bottom of that wick and stopped. Made a nice reversion play back to this angular. That's an old angular, guys. Pretty easy play. Easy to spot this triple top. So if we breach this zone, let's make it red. If we breach this zone, we get a killer trade to close this gap. Pretty obvious, right down to about 227, 228 or so. Easy setup. Let this thing kind of hatch out a little bit, and we'll see if we break this low. These can fail. Always put that 60-40 rule on there. It's got a 60% chance of follow through. It is bearish. And a 40% chance of failure. If it bounces off this zone, we can cancel that plan and go bulls. Right back to the pivot, half back of the trend. Easy 250, 350. If we breach this zone, look out. That's a hell of a trade. And we'll be all over it when it breaks. Trust me, we'll help it move. Going into quickly look at Microsoft and Google, I kind of have Mr. Soft as still continuing to break and finish this bearish measured move we plotted out a while back here. Pretty obvious stuff. And I might have to wrap early. I'm expecting a windshield guy here in a minute, but looking like we're going to finish this move and maybe find possible liquidity down here at about 372-ish. And previously that was a support area here, so kind of watch for this to follow through and finish making that move. So far so good. We've came up and bombed through that liquidity yesterday. Now it's resistance. Obviously we're still bears. Same thing. Let me go into Google. Different animal. Although we've hit the expected low, and Google will probably give us reversion sooner than Microsoft if things find a reversal here. So we're at a key level, 165. A lot of the BTFD crowd is really interested in it here, and you can see there was a conversation that found the middle ground right where we're at now here. And if we bounce here, sure, easy trade to 177 and maybe even higher. But if we breach this zone, it's a very fast move to the next pivot down here to 148.75. So be aware that we can see that work too. So don't get caught on the wrong side of this. Watch for a break soon on this one. And let me see, one other thing I wanted to talk about. Where did it go? This is one that we talked about before. There it is, IONQ and then QUBT if there's time. IONQ, pretty nice under the 200. Matthew loves watching for those undercut and rallies, and reversion would take us back up here, but I don't think we're done being bears yet. I think we're going to follow through this whole bar and maybe find support around 1580 or so before we get to find a reversal. That doesn't look like a reversal, that's a trend. So keep watching. We'll see if it finds support around that level. And then lastly, QUBT, and then I gotta go. Windshield guys pulled up to the front of the house already. Looking here, QUBT was a great bull trade. We scalped the hell out of this thing. It was pretty easy. I took advantage of a short-term bear move here, and then we kind of forgot about it. Well, it's been melting this trend for a while. It's below liquidity zone. This is starting to look a lot more like market structure, guys, and capitalization isn't done with this yet. So, yeah, we might bounce briefly off the 200 period, but be aware there's a little gap here that we need to go a little bit below the 200 first. So this could, in short term, become a nice little undercut and rally on the 200. But be nimble if you're going to mess with this thing. Percentages are high in a $4 stock, and this thing can really, if you put too much size in it, rip your face off quickly. So be careful with this guy. Be nimble. If you're going to dabble with it, cool, but just be aware that we start breaking levels, things move fast. And then usually when they do move fast, the reversion trade's quick. So you'll see very quick liquidity pick this up. I bet there's a big pile of limit orders right in this range. I'm not a betting man, but yeah, I can see that's going to be obvious. So keep an eye on this guy. It may give you a quick little reversion trade, and percentage-wise, dude, those $4 stocks, they move $1, you're killing it percentage-wise. You know the rules. That's a pretty nice gain. Same thing I'm doing with MSTU. I'm wheel trading it and taking advantage of the premium and keeping my cost basis low. That thing has killer options liquidity. QUBT, I don't even know if it has an option chain. I haven't looked at it. But I know where I like to play, and those little $4 and $5 stocks, they're pretty awesome, especially if they happen to be a single equity, leveraged ETF. The premium's great. I'll keep scalping that. All right, then. We'll see you on Friday with Rebel Finance, and we've got a pretty interesting guest lined up for that. So definitely tune in to Matthew's channel over there on Friday. I'm not going to plagiarize it here on my channel and repost it here. I think it deserves its own place, and Matthew's getting that podcast going, and I really love what he's got in mind for stuff down the road here. And some of the guest lists, I can't tell you anything, but there are going to be some pretty interesting people to talk to, and I can't wait. We'll see you Friday, same time, 11:30.